Good morning, ladies and gentlemen. This is Clueless A Trading Frank. This is a quick pre-market update um, for March 13th, Daylight Savings Time and Eastern Standard Time here from the New York, New Jersey area. So I'm going to give a quick primer and a walkthrough on one of the most effective and powerful and accurate market trigger signals, and that's the Quad Algo HFT chart platform, as I like to call them. The company's called Quad. Many of you or some of you are starting to use it, and you're seeing the effectiveness of it, and the rest of you are being delivered the precise trigger signals of market inflection points from the highs to the lows and the lows to the highs and the trading ranges and such. As you all know, I use three different platforms. I use multiple platforms, so more than three. But the main ones are Thinkorswim and this Quad Algo HFT, and of course I use investing.com, the ones with the white background for some of you who are not aware of it yet, which are also very, very effective. Also use freestockcharts.com, which is part of the Warden Group, and that's also a nice, effective tool, specifically looking at the swing picture of things on the marketplace for individual stocks as well as markets. So let me make good use of this next 20 minutes or so. Keep this nice and short and to the point. So what you're seeing behind you is S&P 500 and all the lines that are drawn on it. Remember, a chart itself really doesn't tell you a heck of a lot. It's the structure you draw on it, as I've constantly reminded people, is what gives you the roadmap to navigate these, in my opinion, extremely volatile market, even if they're within very tight ranges, or let's say 5 S&P handles pre-market, or let's say 5 or 6 S&P points back and forth intraday. The direct effect on individual stocks can be quite dramatic. We have seen this over and over and over again. So it's extremely critical, to say the least, that one have a strong cognitive understanding and a visual understanding. And you do not need to be a PhD in technical analysis, to be honest with you, because the structure that's drawn on top of these charts, whether they be parallel uptrending channels, downtrend channels, you can see that clearly. Downtrend line. I even put markers on major inflection points so people can start to understand the supply and demand points as to where the sellers come in. And these sellers are primarily algo HFT bots, robots, black box programs, which basically hit the market at any given time. One of the key things, very simply, for people who are trying to get get some sort of handle on how to manage their trades, very, very importantly, is to look to see what's happening on the internal basis. One of the key things that I focus in, among many other things, like to keep it simple, using the KISS principle, keep it simple, stupid, is that I use the slow stochastics. After many months, many of you are finally getting the hang of it, and some of you got the hang of it a long time ago, because I've been constantly coaching on this stuff, whether it be in advanced coaching sessions or real time or on my end of the day reports and these type of pre-market reports. The slow stochastics basically gives a very powerful idea as to what might be going on. Now, saying all that, the process at the time that it's happening is not that quite simple, because the slow stos can basically just bounce around and confuse the heck out of traders. And if you look at this particular bounce here, and where it just kind of hugged the 30 RSI line, because the slow stochastic is one of the derivatives of the relative strength index, and you can see here that's when the market does this type of stuff. So it's not really breaking down, it's not breaking out, and it's kind of just muddling around at the on the floor. However, I even on the slow stos, I draw certain patterns, not too many, primarily uptrend lines or baseline bottoming process lines, and you can see that, not that hard, to give people an understanding that things are not falling apart like they normally do, as we got from the impulse surge of 300 plus points last week, early last week, I should say, um, and and you can basically see that was it last week or the week before? I'm really losing track here. Anyway, when we got that massive move up, and you can see what happened to the slow stows. Even on the slow stows, the simple thing you all have to concentrate on is the markers. And if I in the rush of things, and it gets really busy during the day, if I forget to put the markers, just look to see where we are. Are you in the oversold area down here, or are you on the overbought area? Once you get overbought, it can move sideways. There's no guarantee per se that it's going to immediately curl down and reset. This reset, which I talked about extensively in one of my earlier video casts, okay, I think it was the not the last one, the one prior to that, what's going to happen, and that's exactly what happened. So there's a lot of messaging that's coming out of the chart. So let me walk you through very simple what you have to look at. Look at the trend lines. Are we in a downtrend? Are we breaking out of the downtrend? Very importantly, look at the downtrend line. Look at the uptrend line. This is an uptrend line. Look to see, I even marked that clearly, where the gap fills are. Okay, there was a gap fill here. Market bounced exactly off that. Also, very importantly, look to see where the pivot is. Now, what I do, because sometimes it gets a little bit difficult if people on the rush not to notice it, I draw the dotted yellow line, okay, which I can clearly on my multiple screens as the pivot. So anytime you see a yellow dotted line, that's the pivot. What's the purpose of pivot? In real simple fifth grade, second grade terms, above pivot is great, below pivot is not good. The pivot acts as a major resistance when you're trying to come up from the bottom, and the pivot acts as major support when you're coming off the top. That's exactly what the markets did on Friday, where we bounced off pivot, as I clearly stated out, and 70-cent lottos expiring the same day on Friday, SPX lottos, went to almost $4. That's only between 1 p.m. and till market close. Okay? And all along the way, it went from 70 cents to $1 to $1.50 to 2.80 to 3.20, and then it hit $4. There's no guarantee what's going to happen. That's just the way it works. However, the candles were being formed, and so that's one of the things you gotta notice. You gotta zoom in and look to see what the candle shapes are. That's a reversal hammer. That's a reversal hammer. That's the one that caught my short. I got caught on the bear trap, because this reversal hammer, which should have come down here, see this dotted line? This is the gap right there, right there. Okay, that's why I said gap fill. There's an upper gap fill, there's a lower gap fill. And that's why this area is called the gap fill. It hit the upper gap fill. I was almost certain, and it doesn't matter because the machines are a heck of a lot faster than me, okay, that we were going to hit the lower gap fill at that 2350 level. We didn't. We reversed right off, and that's a very powerful reversal hammer reversal, okay, like a firecracker. Anything, and the opposite of that is a inverted hammer is the one. This is an inverted hammer, okay, right there. And these are just basics. So, and I got hurt on that one particular trade. So it reversed, and then it kept on going. And the next morning with the jobs report, it kept on going. And lo and behold, what did it hit? It hit exactly. Well, it hit this. It overshot the Bollingers. Keep an eye on the Bollingers. This cloudy stuff, right? So the Bollinger Cloud, if you want to call it that, or Bollinger Bands, it overshot the Bollinger. Immediately, sell programs came in, and you got a big fat bearish engulfing. This red candle come through. Found some minor support at this line here, this orange line, was the 34 SMA. Bounced a little bit, fell below that. There's an uptrend line here drawn from all the way back from the 24th of February. This blue line here. It held the blue line, bounced off that, went below that, bounced off, fell below that. I was almost certain that we wouldn't break below pivot, and I was watching that real careful, because if that broke, and there's your channel again, and it entered this downtrend channel, the next level of engagement would be that previous low from Thursday afternoon, which was the upper gap fill. If things went really south, then the lower gap fill, which I thought the market would have gone to on Thursday, would have been filled. So this lower gap fill from a technical standpoint is still unsatisfied, has not been met. Okay? Maybe it's not going to be met right away, and maybe it will. So things you have to watch for. You have to watch for the pivot, very important. I would say 90% of the time I put a P there. This is real second grade version, I'll tell you. Walking people through every single thing. It takes a lot of effort and time on my part, trading my own book, engaging my members on the in the public chat room, posting relevant, very important information on the real-time Twitter feed, alerts, charts, and putting these captions on top of charts. So it'll make my life a lot easier and yours a lot more effective if you understood some basics. Now I have a whole series of training videos on the YouTube channel, and I've separated those instructional videos into one folder called Training Videos, Quad and TOS, it says, and I suggest that everyone go back and refresh that at their own time. These are extremely helpful, but more than helpful, let's face facts. They make money, or they help you lose less money. And you don't sit around saying, oh, here we go, and the next thing you know, there comes the big fat reversal. So anyway, then this pivot, it hit the pivot, and look how powerfully accurate that is, and that would, so we don't know it's going to turn from here. So once it starts to turn, you want to engage on the long side. That's where my alerts go off. And even if we got here, we could have turned from here. You could have scaled in it. You got your first entry here, your second entry right off the pivot reversal, and then you'd be selling on the way up. Once you get towards the upper end of the Bollinger, it would be smart to take some nice profits. So just again, you got uptrend lines. You got, look at this blue line here. This is a wide channel. There's an upper gap fill here that hasn't been satisfied yet. It could be satisfied today for all I know, and that's at 2382. The lower gap fill has been satisfied, and that's why I drew this box, right? Upper gap fill, lower gap fill, and that has been satisfied at 2384. And that was satisfied on Thursday, or met. Patterns are extremely important, as you can clearly see here. This is not a linear market. There's a lot of chop. What retail traders like to say, it's basically structured volatility created by machines, period. So one can look at this pattern here and say, hey, that's a head and shoulder. Sure is. That's your head. There's your left shoulder. Here's your right shoulder. So this could be a powerful resistance point. We shall see. Not ultimate, but a powerful buy zone would be the lower gap fill. I'd like to remind people on that. And we could get that before Wednesday, or on Wednesday, or earlier. Remember, trading and investing is a game of probabilities, not a game of certainties. So if you're looking for certainty, go somewhere else. Don't trade. Because by the time it's certain, the trade is done. Or you pay a very high price for certainty, as Warren Buffett would like to say. There is a gap here, unfilled. That's at 2394. We shall see. So one pattern is a large head and shoulder, very powerful bullish, a bearish engulfing reversal. The other pattern that you can look at as this market here is starting to create a inverted head and shoulder. There's your head. Here's your rolling left shoulder. Could be a rolling right shoulder where the market basically holds its support on the right side. The pivot support, the gap fill support. And a completion of the inverted head and shoulder where a neckline is here at 2383. So this is going to be a very powerful resistance. Remember in the video cast where I showed the possibility of upside and downside almost a week ago, we talked about it, and it was an ACS class with two of my best students and members, Fish Eyes and Swimming the Market. We talked about the fact that this could be a bear flag. Well, it certainly was. That's what a bear flag looks like. You never know it's going to happen. It could have rushed forward, but then it turned out to be a bear flag. The possibility was there. So looking at this here, keep in mind that this could be an inverted head and shoulder with a neckline here and a break above. And once you hit the neckline, you look at this pattern here, it probably pulls back a little bit. and then rushes forward towards the 2400 level. There is a high probability we hit and retest the old highs of 2400 plus by Friday. Okay, and in between, you're going to see a lot of structured volatility. All patterns that I can discern, and I hope a lot of you can see it too. In the meantime, the internals are getting overbought. Not overbought yet, but you can see here clearly that this was the closing on Friday, and it was getting up there towards the overbought zone. Now, overbought doesn't mean it's going to immediately have to crash down and reset. It can move sideways, grind its way higher. That's normally the trademark of a strong intermediate bull market and a bull market that we're going through. Because the shorts get squeezed, they cover, the bulls keep on pressing. Let's move on to the SPYs, which are real time. And right there. Now, this for traders is a phenomenal chart. Very easy to understand. You got a big shaded area, which is the gap fill. That turns out to be on the upper end, around 238.39. I trade off this all the time. Remember, I do a whole bunch of other trades too that I cannot post, because this is not a ditto trading service where you're exactly mimicking my book. I'm putting out fantastic trades, really good trades on multiple fronts, individual stocks, and S&P, and RUT, Russell 2000, or IWM, which I think will benefit my members in a tremendous way. And many of you are benefiting tremendously. So bottom line is that looking at this here, this is a zoomed version of the same thing. This is a SPY, and you can see here that this was Friday's, I believe this was Friday's close. No, this is a real time because the pre-post market data is being populated, and you can see where we are. This is the fast stochastics. You can see that. That moves faster than the slow, obviously. And the slow stows, looking at this here, still has room to move higher. The more you look at patterns, the more they start talking to you. Okay? It's like art appreciation. It's like Pluto say trading chart appreciation. You got to do it. You got to practice. Let your eyes and brains synchronize. If you don't, you're not going to survive these type of robotic markets, period. And active traders, just watching price is your death knell, because you're not going to make it. Prices reverse in nanoseconds. You can see that. So this is a nice pattern. This gap, in my opinion, gets filled. If we enter the upper channel, this dotted line here, then obviously we got room to move, and I believe that will happen by the end of the week. We test the highs, or maybe on Wednesday. There is going to be volatility going into Wednesday. This is the most powerful Fed meeting where the rate hike is almost 100% baked in on the Fed funds futures. And you got a whole bunch of other stuff. You got the Brexit vote, or in the sense that the UK, the referendum's done, but voting within Parliament and all that stuff. Scotland, I just read, is looking to have their own referendum because they do not want to have Brexit. They're going to get hurt. And Scotland and Scottish independence has been on the cards for a long time. So they might do a referendum again to decide whether to stay with the United Kingdom or become a separate nation. So all that stuff is in the cards. All right, so this is pretty clear, right? You got the pivot here. Now remember, the pivot will change this morning as we get into the as the markets open, and I'll be adjusting it accordingly. But you can see exactly what happened. Looking at the same chart here on a more zoomed version, it's easy to read. Now these dotted lines that you're looking at, these are the gap fills. This is the wide gap fill, and this white dotted line is the lower gap fill. Upper gap fill is right here, and we are above that right now. Here's your pivot from Friday. It will change this morning. And the shaded area, when I put it, it's just an added reinforcement so that people's eyes can look at it on an iPhone, on other devices, on their iPads, on their PCs, on their Macs, that this shaded area is basically the area that the market is going to, and these are all gap fill areas, by the way, where the market is basically trading in at this point. So there's a lot of helpful pointers. You just have to synchronize your eyes and your brain and act accordingly. Looking at the RUT, this is a chart of the Russell 2000. You're starting to the downtrend line is still intact. I mean, the downtrend channel, it needs to break out above that over the pivot. It went to the pivot on the 10th, but failed. A lot of pressure from oil, mining related companies, specifically commodity oil, which are in the Russell 2000. Obviously, Russell 2000 was weak. Doesn't say anything. It can get strong in 2 seconds. I remember last year, all the so-called gurus on other forums and on media said the Russell 2000 was nothing. The Russell 2000 was the best performing index after the elections. It just couldn't stop. And just a hypothetical, I mean, a real example, $4 call on the Russell 2000, as was alerted, went to 80 plus, only for people who held it all along the way or took staggered profits along the way. You'd figure it out, okay? 4 grand goes to 86,000 bucks in 2 weeks. Just think for a minute, okay? Check the cues. This is an unconstructed chart. In other words, just the Bollinger cover, the Bollinger Bands, and looking at it. And this is the hourly chart. I have more specific charts on the cues on TOS. Looking at the VIX. This is your VIX chart. It's a more broken, chopped chart because the VIX is a derivative instrument and doesn't look. Yes, you can discern patterns in it, but it just doesn't move like an individual stock. The VIX is just, your best way to look at the VIX is the lines that I draw as to where it can go. The big reversal point right here, 1272. There's an upper gap here at around 1297, call it 13. You cannot trade the VIX like an individual stock per se, all right? Because look at the chop. Best way, one of the fastest ways to understand whether the VIX is really about to explode or whatever. Look at the candle direction. Look at the Bollinger Bands. Any major overshoot over 13. If you look at the daily, the VIX has been on a very tight trading range. Forget these spikes. Those are those 1,000 point drops in the market. So it's basically stuck in this band. Once it breaks out over 13, over 13 and a half, you're looking at 15. Once it breaks out over 15, that's when you're seeing this type of stuff. Now remember, the VIX can also break out on overnight action. If the futures open down 30 points, or the futures open down 15 points, you get that big fat move higher. Keep in mind the VIX on the low end of the range, just keep it simple, at around 10, 10 and a half, buying opportunity. Market's overbought on the other side. VIX on this move here, somewhere between markets overbought, VIX oversold down here on the upper end here at 1280, 13. This is not rocket science, guys, okay, ladies and gentlemen. Is basically it's getting overbought, and this comes into play. That's it for now. I hope you all have a great week. I'll certainly be guiding people as much as I can, but I want you guys to guide yourselves. Remember, I provide extremely powerful and effective tools. You have to build your own house. This is not a market. This is not grandpa's market. This is extremely robotic. It is extremely powerful. Reversals and movements happen within minutes, if not seconds. And you have to basically learn how to manage volatility. People say they're here to learn. Well, learn faster, because that's only to your own benefit. You cannot just sit there and keep on telling yourself, I'm willing to learn, and not putting in the hard work of learning. Remember, everybody wants to be a millionaire and a billionaire. Very few make it, because the majority do not want to put in the blood, sweat, and tears needed and the hard work and focus needed to get there. It's like building a business. Treat trading like a business. It's your business. You're building step by step. Faster is better. Ignorance is not bliss. And if you're nervous, do very small trades. Buy one contract. But don't just sit there and tool around and watch all these things happen while you're just a spectator. Eventually, it kills you inside. Make mistakes. There's nothing wrong with that. Mistakes and failures are the bedrock and the stepping stones for ultimate success. And just because you had success doesn't mean you're going to have all repeated success, but you're on your way. On that note, have a great day. See you guys in the chat.